Hello, hello, hello. Happy PPI Tuesday. How is everyone doing this morning? We got, is that pronounced Roe? Roe Freeland. Roe, thank you for chiming in with a good morning first thing, beating everybody else in. And we got Patrick. Let me know if I pronounced that wrong. Sterling, as always, with the figures and the news in here. U.S. PPI month over month, actual 0.5 versus 0.2 previous. Estimated 0.3 is coming in hot. The core coming in that's year over year figures, roughly in line. So, but it's still coming in hot overall. Go through the numbers in the morning. Good morning, Sterling. All right. This is 43% of home buyers struggle to make mortgage payments. And I'm going to talk a little about housing. I'll probably slice into that right now. Since buying, I saw that too. 44% of new homeowners have taken on extra debt to maintain their lifestyle. 43% have struggled to make mortgage payments on time, according to Clever Real Estate. I did see that too, and thank you for putting that in. All right, real quick. Let me just do a quick sidetrack because I've moved and renting right now, but looking at homes just to get an idea and a feel for stuff around here. I'm in Scottsdale, Greater Phoenix land area, and housing is psychotic here. All right, so I saw one dropped yesterday over dropped $100,000 price drop. They were looking to, and this is not a luxury rental for people coming into town that want to winter here. This is, I need to rent something for my family kind of house. Now they were trying to rent it at first. They were trying to rent it at $4,100 a month, and then they dropped it to $39,000. So let's just call it $4,000 on average, which is nearly $50,000 a year in rental payments after tax. So you have to be making some buck, especially if you have kids. Even a family has to be making, unless your rent's going to take up most of your money. So could not rent it out. So they put it up for sale, and it's been sitting, and they just dropped it $100,000. But if you do the math, if you were to put 20% down, and then you finance the rest with current mortgage rates, your payment would be $5,700 a month. So what they couldn't rent it for $4,000. They're trying to, and again, if you have a lot more cash, your payment will come down. But even if you put down double, like 40%, your payment's still going to be above $4,000 a month. My point is, around here, and I'm not talking about already people who are retired or super rich or everything else. I'm talking a house that you can, your good, decent school district. You need to rent something, or you even want to buy something, you're not going to be able to, as with the average stuff. Now, if this was a stock chart, where would we find home? Where would we find? All right, what would we call this? Well, I'd call it vertical up, probably vertical down. And where would I look for the first key area of support would be in here. Yeah, if I could put harmonics on here, this would be the 87.5. Now we're probably pretty close to that 50% level from using this as a floor. Okay. So we'll probably pass that 62.5. We start closing below that. It'll be a return to the 87.5. And then housing could definitely overshoot. Housing does tend to overshoot the other way. So sales are falling, and you run the numbers. If you run the numbers don't make sense. And here's the other thing. Greatest gaps between wage growth and rent growth since pre-pandemic. Well, here's one. Phoenix. I could probably speak to Indianapolis too because of the Midwest thing, but Phoenix. Increase in wages from 2019 to 2023, 16.6. Increase in rents, 39.1%. Not sustainable. Okay, not sustainable. And this is not just apartments for rent, this is houses for rent, which shows they couldn't rent it out at $4,000. You're not going to sell it if somebody's got to take on $5,700 in mortgage payments. Stuff needs to really get back in line. Or how could it also do? Things have to be going. The wages have to start going way up. And people already have. I'm not talking about everybody. A lot of people have good jobs, but some people have 2 jobs, 3 jobs. So something's got to give at some point. And I think we're already starting to see it because there's some properties that are starting to drop aggressively their prices. I'm just going to go look at a couple of them just to get a mindset. But one was purchased last year already at 900. They just dropped it to 775. So even if they purchase outright in cash, they're going to take a lot. They're going to take a loss no matter what. Now they obviously have to unload it. But even about last year's prices, now there's a lot of people still around here that hey, I'm not dropping. But once you start getting, remember how comps to the upside work. Hey, that house just sold in this neighborhood for let's just go $300 a square foot. Then somebody else sells theirs at $350 a square foot. Then 400 square foot. Then 450 a square foot. Then 500 square foot. And there's a bunch of people sitting on 550, 500 square foot, $500 per square foot house that they want. But then if it starts unraveling the other way, oh, this house just sold and comped out at 450 a square foot. Then somebody sells it, or a couple people sell it at 400 a square foot. It goes back down because those are the recent comps. And I'm not making this about a real estate channel, but we could see, it's going to get interesting. Either wages have to catch up, and inflation is crushing people. This ties me in. Oh, the market's already shrugged this off. PPI came in hot, but you know what? It was not CPI. All right, it's on the fastest increase in 12 months. Inflation, even if you say it's going to stall out here, let's say it stalls out at 3.5% to 4%, it's going to keep crushing people because wages aren't going to keep growing at 3.5% to 4%. And it ties in what Sterling said, up here. 44% of new homeowners have taken on extra debt to maintain their lifestyle. 43% have struggled to make mortgage payments on time. Okay, that's not a good stat. Because what happens if somebody, God forbid, loses their job, or they have two jobs and one goes away, or their spouse loses their job, and these are already the numbers, and we're supposed to be in a decent economy? No, not going to be good. Let's see if Cook's speaking at 9:10 or Powell speaking at 10 a.m. Did Powell already? No, that's still dealing with the time change sometimes. So 9:10 is right now. Cooks should be speaking, and Powell is speaking in about 50 minutes. Let's see if they address it. But this is going to be interesting. Total household debt. That's been climbing. Look at this. Total household debt. If I hover right here, you can see how that's been climbing. That's not, again, and now you have credit card debt over $1 trillion at an average interest on a credit card of 23%. Nope. We got to get some changes going. People are going to start tapping out, and it's not going to be good. Oh, boy. So, maybe I lost a bunch of people with that little sidetrack. But this will affect the stock market because the stock market isn't cheap, too. Good morning, John. Good morning, Legion Reaver. Yeah, we have re-entered the meme-driven markets, which, okay. If you looked at GameStop yesterday, come on. By the way, if you were already in some way influenced before your tweet out stuff and then the stock, that you know what, this is where the SEC has to get their head out of their friggin' ass. Good morning, Ted. Haven't seen you in a while, Ted. Hello, Charles. Good morning, Royal Palms. If you feel useless, just remember that Cook. Hey, Rich, how you doing? Meme stocks are back. They'll die again quickly. Dark screen. How the penny stocks doing? I don't look at that. I'm actually asking honestly because I don't look at them. Good morning, Jacob. Morning, Mike. Front ran the double bottom on the 4-hour with the 1-hour bar support at 62.5 within the rotation zone. We had a little mini, which would you double bottom on the, okay, well, at least you're working with the strategy. Increasing my cash position as we speak. I don't know what you meant. Selling call credit spreads. I mind. You're not leaving, Charles. Good morning, Martinez. Let's see. Adam, you know what? Yeah, I'm not going to comment. All right. Well, thank you, everybody, for tuning in. So, not much. Remember, CPI, most important day of the week is tomorrow. Let's see if CPI follows and coming in hotter. But the market's already shrugged off PPI. Let's just do a quick refresh on the heat map. Already coming back, except into it, not doing so hot. Slightly down with some of the mega caps. Well, look at there we go. Let's use influencers to try to influence Elon's new pay package that was struck down before. Let's try to get that going for, oh boy. This market. But you trade with the trend until the trend ends. Remember, the trend is your friend until it ends. Basic materials, utilities, real estate, and consumer defensive. So it's still more of a risk-off day going into the open. Hate the term, but it's still more of a risk-off day. Let's see if it shifts to a risk-on day later. Energy, still can't get any traction, but it is in that critical area we've talked about. Fed watch, still, this is climbing a bit, but I really want to see after the open if this how this reacts. I think we could have the bigger shift tomorrow, but still a rate cut in September and one more possibly in December. Fear and greed still in neutral mode. Market Schiller in cheap. Home Depot was a beat on EPS, a miss on revenue, but still pretty flat. The market was focused more on, I'll have to look at that a bit after the open, but still pretty flat. Overall, I gave the key levels either for the breakout or a breakdown yesterday, and it's still within those key levels last time I looked. Not much after the close. Tomorrow morning, not much from a market moving, and then you got Cisco tomorrow afternoon. But tomorrow's going to focus on those CPI numbers in the morning. All right, shrugging off everything. Everything's fine and dandy. So we had a look double top. This is where we didn't even close below this. If you're saying, okay, well, I'll look at it on the 1 hour. You dip down, hit the first target, and then boom. So it's confirmed, but it's already going to be off the table probably, especially with that rundown. Look at this. By the time it actually triggers, if this closes above 52.46.25, it's already invalidated it. Or once we trade through 52.52, because we already hit the stop reduction or the invalidation point. You have to mark that down. So there we go. So already shrugging that off. Looks more like a corrective channel. See here on that 4 hour corrective channel coming back down. So channeling doubled. It's not even going to trigger. So if you're looking at, this is even interesting if you're going into the numbers today to watch. If it does close above that 52.46, it could be poised to retest the high area from Friday and from Monday. Keep that in mind. If we break my key resistance is the 52.65 area. We break above 52.65, 52.87 to 5300 is the next magnet price, especially that 52.87. Based off this reaction, and if you look at it on the daily, look at where we came down to. 8 EMA. Boom. That 8 is so gosh darn powerful. So that's where we sit. Again, if you're looking for something to the downside, you could still on the breakdown use these levels lower, but my key area for support would be 52.32. 52.32 to about 52.32, and my major support I'll watch at the open is this 52.41 area. 52.40, 52.41 going into the open. With all this, I haven't even looked at ARC. Was set for a daily double bottom. What else we have? The NASDAQ, again, shrugging it off. Mr. Shruggy Shoulders. Coming down, you had the little potential double top. Didn't even get to the first. It didn't, of course, trigger it because it's beep, beep. Look how fast. Look at how fast. PPI numbers. Boop. Here's a 5-minute chart. Didn't even close in there on a 5-minute chart. Just boop, boop. Like it didn't even happen. Like it didn't even happen. All right. So, based off this, the shrug off, it's already back above this 18 18,279.50. Going to be seeing if we do that 4-hour close above there, but your key resistance is 18,325. Then it's the high from Friday, 18,348. And remember, you're into a clear path move. Look at the prior top out with the 87.5. So 18,509 is the next major target up. That's it. That is it. If you need to use some, if it breaks out and you're a short-term trader, this is a great place to use reverse harmonics off that dip. Oh, little bug there. Reverse harmonics. So if you were an intraday trader and it broke above Friday's highs, I'd be looking at 18,370 and 18,394 roughly. Those would be my intraday levels. Using reverse harmonics right there. The Dow, let's just look at the bigger picture here. Still having the key resistance at that 75. And you look here, this is a prior breakdown level. This is the area struggling and tried to pop above it yesterday and close back down below it. So I'd be watching around 39,680 really about for the breakout level. And there's still a gap left behind, by the way. There's still a gap left behind the Dow, so if you need another intermediate levels, 39,894, 39,895 area, and then 39,996. So a return to 40K. That's about it. The key support, I just watched today's low and do the harmonics on it. Russell, look at this. This is the only one. Russell completely shrugging it off. Everything's fine and dandy in Russell land. In Russell land. Holding the key support right in here on the little spike down with those PPI numbers and now rotating back up. Still a little dip into that 8 area and moving up, but what's the magnet price after the close above that 62.5, which happened back on the 7th? We got the minor price of 21.04 and the major price of 21.35. So we're almost into, we didn't get there quite yet. But let's see if we take out this 2104.2 today, because that puts the Russell also in double top territory. Now, the Russell's one of the lower probability ones, but look, if that triggers, that's going down to retest last October lows. Most based off probabilities, no guarantees. VIX, little elevated, but I mean, this isn't that elevated going into the CPI numbers. It's really got to get above 14 before I'll sit up and take notice. The DAX, still in potential double top territory, a long way off. Your key support still down about 18,700. 18,675 to 18,700. Came right off the just shy of the next harmonic. So if it the next target area, let's see where this puts it also. That looks like a slight. So we got a cluster there. This is off. How did that get off? There we go. But that would be if it breaks out above Friday's high. I'd be watching this cluster up here, 19,121 to 19,136. The notes also little dip down, but shrugging it off. Still caught between the rotation zone and the 50. Not expecting much follow through going unless Powell says something shocking today, because we got the CPI numbers tomorrow, which are more important. The yield on the 10-year still caught. We don't need to talk about that much today. Dollar index. Look at this. The little bounce up and then boop, reversal. So, remember it hit the first and second targets. I'm going to be watching it come down. I really might come down big over the next couple days and hit. Remember, cycle's still going down, but it could find this key support back at the 200. But there's no short-term bullish pattern just yet. Crude coming back down to test that 50% harmonic. Again, this is getting triple bottomy. But would I be short in crude? No, because we're going into the key support area. Very key support, not just from the harmonics, but from prior price action. We need to wait with the rotation zone in the short term being bearish and cycles rolling over to the top. Need to be patient from my perspective and wait for a setup. Gold. Remember, this was a double. We weren't talking about shorten. This is a double that looking for the key level cut at that level and then bouncing up, but the double's still not invalidated. Gold will probably get a lot more movement tomorrow morning. Keep an eye on the yen. Keep an eye on the yen because it's finally got between that 50 and 62.5 again. Looking a little toppy with cycles at the top, so I'm going to start watching to see if it gets a pullback here. Then that would be another reaction, and then that 62.5 is still very key on a closing basis. 150, just remember 157.10. Now let's talk about with the euro. Besides breaking above short-term key resistance, I think the magnet price up here is this 108.70 area, 108.55 to 108.70. Spiders. Yesterday's close 520.91. Today, slight gap open 521.09. If it takes out yesterday's high 522.67, which we have not only yesterday's high but Friday's high right in there. You can see it was a double top, but based off this open, we'll probably triple top. Triple top slightly favors continuation. Remember that. Slightly. The next key target, though, if it takes out Friday and Monday's high area, is 523.75. And then there's a major cluster about 524.70. The Qs also keep a very close eye if the Qs take out 444.15 area, 444.20. Now the Qs, come on, give me my chart. Give me my chart. You do still have, looking to gap down a bit, still gapping down a bit from yesterday's close. So minor magnet price 443.08, then really watch the Friday's high area 444.31. The Qs still have this little, yeah. Now, if it breaks below about 440.50, your major target area is 437.70 to 438, from my perspective. All right, go Bitcoin. Not much to talk about still. Still watching the not a neckline. The not a neckline for key resistance. What else do we have? We have Tesla. Still watching anything, any rally plays. We'll watch it for rollover setups. Nothing there yet. Nvidia. Not much to talk about there just yet. Remember, if we really start breaking down below about 875, you got a gap left behind. Home Depot. Oh, now it's a little down, but you got the 200. Remember, 200 is an area. You can see it right here. 344, but it's still between the two key areas. 330 would be the real breakdown area for me. And then the kiss it goodbye level is 314.15. I'm not just talking today, but if you see it close below 314.15, we could easily retest last October's lows. Breakout area is still, you see, right against the 50 and the 25% retracement harmonic. What else have I missed? It went quiet. Boy, the chat went quiet. I can't be that interesting. So let's take a look going into the open. I just can't believe how quick that shrugged off the PPI. Key support going in the open still, 52.40 to 52.41 is going to be my key support level. And the key resistance going into the open that it needs to break and possibly retest before it can get traction to the upside is 52.50. I'm going to err on the side, unless we get some major trend going, of a potential choppier today because of CPI tomorrow. But that's the levels I'll be looking at going into the open. Let's just wait for the tick to show up. Is my chat working? AMC. Let's take a look at AMC. I mean, this is insane. Come on. But remember, I've talked about this. Oh, geez. Yep, close to 12 on that pre-market. This is where shorting something to try to squeeze out the last little remaining is way too risky. I've talked about that before. Not going to be heavily short trying to pick up another couple bucks when you can get this kind of garbage to the upside. GME. I mean, look at this. So you're telling... all right. And this is based off of yesterday's stuff. P to E, 823. GameStop, all right, so last week it was a $12 stock and now it's a $60 stock. Oh, but the markets are efficient. All based off somebody tweeting out a meme, a roaring kitty. Roaring kitty. Moving the market down would be interesting as if he got long here and then tweeted out. But the SEC will probably won't do anything. Because they're garbage, too. They only enforce what they want to enforce. There's your tick. Strong opening. Wow. Not as strong as yesterday, but another strong opening. Another above 1,200 opening. So on the tick pullback, what do we watch for? Well, what do I watch for? I watch as the tick pulls back for key support to hold. Because as the tick pulls back and key support holds and then starts bouncing up again, then I'll watch for the breakout play. If we don't hold key support, then I'll go into more of a choppier mode. But it looks like key support so far is going to hold. Is it possible that with the popularity of options trading by retail investors, we're stuck in the options-driven gamma world for the severe? Well, remember, yeah, there is a lot more gamma, but what's generating the great gamma, the great gamma in the sky higher can go, it can change on a dime. So, yes, we are still in. Well, you can see it. You can completely see it. We're still in rah-rah markets. And I don't want people to get the impression, I mean, the markets could reverse if a CPI comes in hot tomorrow. However, before the even double triggers, if it ever does, we have to do a lot of technical damage. So the trend is still up in the short term. Could it reverse? Yeah, because we're already in key double top territory, but you got to trade with the trend until it ends. And if you look just on that weekly chart, percent B buy on a weekly basis down here. So let's even say you got in at the close 43.75. Let's say your trigger point is this 49.60, what level? 49.63.50. This is a great teaching moment, actually, because there's easier ways to get out, and I'd be looking to fine-tune something and exit up here, unless it really blows through the top Monday's high, April 1st highs. April Fools. But let's just say off the complete thing, you took the reversal 43.77, this double were to trigger. You get out, roughly 49.60 area. You took a big chunk out of the middle on a longer term basis. A big chunk, and that's what people should be looking to do. A big chunk out of the middle. You're not going to be going, oh, I didn't buy 41.50s and sell 53.40s. And you could say that right now. Oh, I wanted to sell 53.40s, but the trend is still up. Remember, caught on the weekly rotation zone. This could, see, what could happen? If you just take away all the noise right here, this could still rotate up. Take out these highs and keep on going. Trend is your friend till the end. All right. Anything else? I'm not seeing anything else. Let's peek back at the S&P. Again, we had our little housing discussion. If anybody has housing anecdotes or anything around their area or their neck of the woods, please feel free to share it. So, still look at so no follow through yet. Still got these 5250s. 5250s. Very key resistance. So in order for me to get bullish, we need to break above 5250 and sustain it. And the key other level for all the S&P traders, here's what I'd be looking at. 5241, 5250. J Powell, what, talking in 30 minutes? So there we go. There's the key levels. Other than this is just no man's land. This is scalpy territory. The good old tickster. All right. So tick's still pulling back. Going to be watching to see if it can't bounce here. You got to be looking back at 0 because that's a pretty strong reversal opening. But I'm going to keep an eye because this 400 tick area, 3 to 400 has got to be key support. If that breaks down, which looks like it's trying to break down, if we start getting prints below 0, watch for that key support level. Of course, GME and AMC halted. Well, it's got to be. And all the stuff, people who don't know, the market is rigged. I saw that all day yesterday. The market is rigged. They only halted. No, they're volatility breakers. They get halted on the upside and the downside. They're just preventing us. The big man on Wall Street preventing us. He's crushing the little guy. Get up. You know what? You obviously don't know. You're more trying to get your narrative than learn how to trade appropriately. Because this is not trading. This is absurd gambling. And this is hoping there's going to be another bigger fool, the bigger fool principle, to dump it off. Remember, how is it different than before? Bloop, bloop. Well, it's just a bigger fool. So, hey, Richard. No, I'm just... I did have... I did have my big mug of coffee. It's just all interesting. And I'm not bullish long-term. Remember, based off valuations, we're still in a bear market. Based off long-term. Short to medium, we've been in a tradable bull market. Long-term, just like valuations aren't there. Stuff is not sustainable. Stuff is not sustainable. But that does not mean it can't remain in insane territory. Well, that's sort of fascinating. Straight back to this 50%. Right? I'm wondering if we flip this. Because we already hit the 87.5. Let's say we flip this for the good old stop of games. The stop of games. I'm pretty close to that. Let's see. Let's get to this low. All right. Look at that. Straight to that 50%. Straight to that 50%. So going to be watching for, you know what? Even if it does insane and it moves back up, anywhere between 65 and 79 is the key top area right now before we could come crashing back down. All right, with that, thank you for tuning in, everybody. Thank you so much for tuning in. And could you like the video, by the way? We got a lot of people viewing this and only 9 likes. That just helps get some traction for this channel. And I think we do share good information. So, and if you don't like it, don't dislike it. Let me know. With that, I shall talk to everyone tomorrow. Bye. Remember CPI tomorrow and Powell talking in a bit, so don't get caught off guard. And I'll talk to everyone later. Bye for now.